Welcome to my Wednesday's Graduates Club live market meeting, 26th August 2020. I am Sagar Nandi. I used to work in IT. I have retired now. I am swing trading stocks using the Q systems and techniques. This is my traders forum, sagarnandi.com. My email ID, tradingprofitably@gmail.com. YouTube channel, Trading Profitably, and Twitter handle, Sagar Nandi. I regularly share live market and stock analysis on these channels. They are open to the public and you are most welcome to make use of them. Please let me know if you can hear me and see my screen. Thank you. Thank you, Mike. Disclaimer, I am not an investment advisor. This demonstration is for educational purposes only. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. This is a live class. I have not prepared for it. We look at the market, sectors, industries, and Q Finder together. These are the systems I use in my trading. For technical analysis, I use Q Elite and Q Global running on TradeStation and Metastock respectively. For fundamental analysis, I use Q Vital. For sector industry rotation analysis, Q Edge. And for market level index analysis, Q Index. That was the last slide of my presentation. I'll continue with the live system. I will not go into the detail today. However, you might have noticed I have released a newer version of Q Diary. When I guide people on trading, I always mention that this plays a very important role in your trading success, in the actual consistent positive outcome of your trading account. After you have a robust system like Q systems and you understand the techniques, how to use Q systems, what still remains is to be disciplined, and discipline in different things, in selection of the trade, in actual entry of the trade, risk management, that is position sizing, and then booking profit or cutting the loss. All of those things need to be done with discipline in a real-time fashion if possible. And Q Diary, this system allows that. It is available to everybody who have access to Q Vital Age Index. You may download it. One of these days, I plan to conduct a 30-minute session to go through Q Diary together with you. So you may give me a few trades that you took maybe last week or the week before that or even this week. We will try to enter them in the Q Diary and see how it is helping us in planning, managing, and exiting the trades and also being disciplined. We may do that today, tomorrow, anytime, but I will request all of you to give me a few actual trades. You don't have to give me the number of shares bought or shorted. During the session, we'll have it as a Zoom meeting. You may give us the symbol and the date, and we look at it together using Q systems, looking back if required, and fill up the diary and see how it is helping us. I look forward to having you participate in that session. That was an announcement. Let me now continue with our live market analysis, starting with global markets. Australian index AXJO, it was inside a range and it is remaining inside a range. The weekly chart has extremely indecisive candles for 2 successive weeks. There is memory support both in the weekly as well as in the daily. That is why it is no time to take any short trade. At the same time, looking at the indecisive sideways move, it is no time to take long trades either. And you will see this pattern is continuing in all the global markets for several weeks. As we saw earlier, only the Indian market was in an uptrend of the global markets. And we'll check it out. Probably that is continuing. At least Australian market is doing the same. Let's look at topics, Japanese index. It is also moving inside a range. No clear direction at the upper edge of the range. Not a place to take long trades. China market, CSI 300. The same sideways move is continuing. Several weekly candles are indecisive. In fact, 4 of them, one after another. Not a time to buy stocks in the China market. No shorting also because it has daily memory support. India market, that was in an uptrend. Let's see what is true today. It is continuing to be in an uptrend. It is the strongest global market. Price is supported by memory trendline support both in the weekly as well as in the daily charts. As I mentioned earlier, the optimal time to buy fundamentally strong stocks in India market was on this day when price tried to go below the memory support, but precisely bounced up from there, ended with a bullish shape candle. At that time, I'm pretty sure some of the fundamentally strong stocks gave Q long trade setup. And if you took those trades, they are already in significant profit relative to the risk, and you could book at least a partial profit. That is how using Q systems, you can time and take it time, buy the stocks at a lower price instead of looking for breakout trades. Of course, you may use Q systems for breakout trades also. I do use them sometimes, the breakout trades using Q systems, but my preferred setups are those which allow me to buy at the low. Which are those setups? Those are go with flow for trend following market, trending market, headwind setup for reversing market, bounce for exhaustion based, and box for sideways market. All the standard Q trade setups allow us to buy low and short high. And those are my favorite setups. You could use that to buy Indian stocks precisely on this day. That also shows how if you keep an eye on the market level, you may time your stock buys with great precision. If you don't keep an eye on the market, you may be tempted to buy stocks even today. Today is also bullish, no doubt about that, but today is not giving me the optimal buy point. The optimal buy point came on this yellow candle that bounced up from memory support. Those are my favorite buy points. Does that help? Yes, actually it helps. Some of you are probably doing much better than even I am doing. I tweeted about the market. This is S&P 500 ETF, SPY. You all know about the shape of this chart. After the COVID crisis in the USA market, SPY dropped sharply. That was in the middle of March. It dropped within about 1 month, 1.5 months, and then it recovered that drop from March till August. So 1, 2, 3, 4, 5, about 5.5 months. It took 1.5 months for the price to drop, and it took 5.5 months to recover to the same level. Now, SPY has recovered doesn't mean that if you bought and held stocks, all those stocks have recovered. That may or may not be true. And it is very difficult, almost impossible, I may say, to time it that you would buy at the very bottom. The buy low or short high using local lows, using Q trade setups that I follow, that allowed me to make consistent profit during the downtrend as well as during the uptrend. And this is the equity graph of the Schwab account where I achieved that. I take most of the, I shouldn't say most, I should say many of the forum trade ideas I share, the Twitter posts that I share, many of them I take in this account. This is a small account. Small is a relative term. I opened it with this particular account. I opened around February with $33,000. Why 33,000? Because this is a Schwab international account, and Schwab told the minimum balance required is 30,000. So I wanted to keep some buffer so that if I had a number of losses, I would still remain within that 30,000 threshold. So I deposited 33,000. 30,000 was the minimum. And you can see more or less steadily it went up. There was one drawdown. This was probably the only time where my account turned negative. That was right after I started trading on the Schwab account. And when was this period? Let's go back to the previous chart. It was in fact somewhere near here. So I might have entered a few trades a little bit early, or maybe my direction was off. That resulted in a loss for a few days. On a closing basis, at the end of the month, there was no loss in the account, but there was a drawdown of the account, and I saw it is less than 10% of my account. That was only in the beginning period. And after that, I have consistently made profit in the account for 6 months, irrespective of whether the market went up or went down. Earlier, I think about 6 months or more than that ago, I demonstrated another account on Tastyworks. That Tastyworks account I set up to see how fast I can double an account. In Tastyworks, I initially traded stocks, and when I had some profit, I could trade options and manage my risks. After that, I used the profit to trade micro E-mini futures. And when I had more profit, I used the profit to trade E-mini futures to speed up the equity growth. But I am not a futures trader. And I mentioned when I explained that scenario that that was only an exercise to see how fast I can double a reasonably sized account. How was that account size? That was 30,000 because 25,000 is the minimum to avoid the day trading rule, and I wanted to keep some buffer in case I had initially a series of losses. So I deposited 30,000 in that account, and I could double that in 2 months, 2 weeks. Now this account is not futures enabled. Neither did I take any micro E-mini nor any E-mini futures. I traded only stocks, only short-term trading, swing trading. And I used options, but those options were stock equivalent, like synthetic stock position, short the put by the call, or they were verticals. So the options didn't accelerate my profit. They were not intended to accelerate my profit. They were intended to manage my trades more efficiently. And when I look back on my trades, I can say that whether I traded those options or not, irrespective of whether I used only stocks or combinations of stocks and options, my profit would have been the same, more or less the same. And why it is so? Some people say they make a lot of profit using options. Now we have to understand the context. Options can help only if you hold the options for longer period of time. If you follow my swing trading ideas that I shared, the average holding period is maybe 5 to 10 days, maybe 5 days. Nowadays it may be a little bit longer, but 7 days, 5 days, 10 days, like that. If you are buying call options or buying put options and holding it for 5 to 7 days, the reward relative to risk will not be more than buying stocks. The same is true for even synthetics. If you are not holding it for maybe 2 months or 1.5 months, it is difficult to make more money using options than using stocks. And because I am a short-term trader, my holding period is decided by when the stock is hitting the profit target. Not that because I traded synthetics or because I traded simple call options, I have to hold it for longer time. That is why for my kind of trading, where I book profit once the risk distance is covered, at least partial profit, and try to hold on to the remaining position with a trailing stop, it doesn't matter whether I am trading options or stocks. And that question many people asked me over time, that am I getting better result because of options? Do I trade more options? The answer is, first answer is no. My result doesn't depend on whether the profitability doesn't depend on whether I trade options or not. And yes, I do trade options sometimes, and that is not to increase profitability, but to be able to manage the trade better. It has more flexibility. This account I started in February, about 6.5 months now, and it has more than 50% profit. And that is the power of using the money over and over again. I shared this video earlier. It is on my tutorial page, and I advise everybody to watch this video. How to make 40 to 60% annual profit of total capital, risking 2% on each trade. In this video, I explained the arithmetic that I probably explained to all of you who are in the Zoom chat, that all we need is about 60% success rate. All we need is about risking only 1% in each trade, and 1:1 reward risk ratio to get 20% return with 2 trades per week. To increase the return from 20 to 40% to 60% to even 100%, you don't have to increase the risk. You may keep it to 1% of your account. Later on, you may change it to 2%. All you need to do is take more trades. And there are plenty of trades to take using the Q systems and techniques, the 360 degrees approach. So you may not need to increase. Actually, I shouldn't say may not. You do not need to increase risk to increase your return using the swing trading techniques I use, because all you need is to increase the number of trades. But at the same time, at, at a time, we don't want to keep many trades open. And the Q diary helps with all those aspects. Q diary helps us achieve this, and even better, why? The latest diary allows us to add to our risk amount in each trade. Earlier, when I shared this video, I mentioned about risking 1 or 2% of your total equity in each trade. But now the diary allows you to decide a percentage of your original equity and then a percentage of the PNL. So if you already made some profit, like my account is in profit by 50% now, I can risk 1% of my equity, and then maybe 2% or even 3% or 4% of my profit in each trade. and that will accelerate your profitability even more. Therefore, the arithmetic that I explained in this video, and by the way, remember that arithmetic has nothing to do with Q systems. It is a simple addition, multiplication, simple arithmetic. That arithmetic has nothing to do with Q system. That arithmetic is actually conservative, because here I was not adding to the risk amount by using part of the profit. The new diary will allow us to do that. And if I go back to the snapshot of the current Schwab account I am using as a demo account, real money account, anybody who has traded with Schwab knows their simulation is horrible. You cannot trade in simulation on Schwab and expect to track the trades properly. Anyway, in this account, in fact, I didn't use part of the profit amount as risk capital in each trade. But now I have the diary updated for that, and I may start that. I may initially take only 1% of the profit amount and then gradually increase. In my experience, it is not a good idea to increase your risk amount suddenly from, let's say, when I started the account, 33,000, 1% of the equity. So each of my trades risk amount was 1%, that is $330. Now I have profit, but doesn't mean that I should suddenly increase it from $330 to, let's say, $1,000. You also need to get used to handling the risk in each trade. So whatever if your is your current risk amount, you may increase by 10%. After 1 week, if you are able to handle that, you increase by 10 more percent. You can rapidly increase the risk amount, and maybe you can keep it finally as 1% of original equity, and let's say up to 3, 4, or 5% of profit amount. That will accelerate your profitability. You can see from this equity graph, I never took any big risk. If I took any big risk, the graph could have been like this. That was not the case. And the new approach that I'm suggesting would have kept the curve uptrending, but the slope would have increased. That is the result that you are able to get when you are buying low, not breakouts. And of course, when you are buying stocks, combining the technicals with fundamentals and industry. Again, some people keep on asking me, why do I need to look at fundamentals if the holding period is 5 days, 10 days? The answer is that for me, it doesn't matter. But because they are fundamentally strong, if the stocks come down little bit, others will support it. So I will not get stopped out so easily. On the other hand, if the market goes up, because they are fundamentally strong, many more people will buy it and they will hit my profit target earlier. Therefore, I will be able to rotate my money into a new trade. And industry rotation is, of course, always useful. Stocks tend to move together in an industry. So industry rotation is always useful, but fundamental is also useful for the reason that I just explained. And using Q systems, we can apply the fundamental, technical, and industry analysis very quickly, as we do in every webinar and as you may be doing every day in your own trading account. In any case, India market was in an uptrend, still in an uptrend, and UK market, the last of the global markets that we study, was moving sideways for a very long time, and it is still true. It is still moving sideways. Now, USA market is very bullish. We all know that. We don't have to open the charts. We will open them. Let's start with SPY. It made a new all-time high yesterday also. It has memory support. All the global markets except India are moving sideways. How long can the USA market continue to go up? The more it is going up now, it is looking like it is ready to fall. However, we don't have any Q short setup, so we are not going to short it. What I intend to mean is that because price is at an extremely high level and all the global markets except India are moving sideways, we may be extra careful. The global markets are not that disjoint from USA market. It cannot be that for a very prolonged period, USA market keeps on going up and other markets are moving sideways. It is not possible. It has not happened before. For a period, it may happen, and there may be reasons. I don't want to go into the reasons because people can always make up theories. It may be because of election, it may be because of Fed, but in the history, it has never happened that USA market, the strongest market in the world, can continue to go up while all the other markets except India are moving sideways. That also brings in mind this point that I mentioned earlier, that there is a tendency of the India market and USA market to move together. Indian market closes earlier than USA market. It is not a way to take your trades. You don't take a trade in USA market looking at how the India market is doing. But if you are watching them and if you are using Q Global, it's just a few keystrokes away, just like I did to look at the global markets, you will come to know that they tend to move better together than other markets. We can see that now also. So if the India market starts to go down, then USA market will remain as the only up market. That will be even more reason to be cautious. But for now it is very bullish, no doubt about that. If we change the weekly chart to add the jump and thrust, both of them hit the red dots in the weekly chart. So even SPY is at an extreme level from where a reversal is likely. And QQQ was already there for many weeks now. Surprisingly strong. The move is led by mega cap stocks. There is no apparent reason why, in spite of COVID crisis worldwide, Apple, Tesla are going up so strongly. They are not only American companies, they are global companies, especially Apple. They sell throughout the world. Throughout the world, all the markets are moving sideways, reflecting the economic situation of those countries. Apple sells in all those countries, but it is continuing to go up. It's unusual. That's all I may say. And I tend to not trade the FANG stocks anyway, but if they start to calm down, that may give an early signal. We'll look at the FANG stocks shortly. QQQ was very strong, SPY very strong. DIA is also strong, coming close to the previous all-time high. I think this was the previous all-time high. Let's change to monthly chart. Yes. So how much distance away is it from previous all-time high? Let's check it out. If we look at the third number from the bottom of the pop-up dialog, only 4.4% from all-time high. When markets are so close to all-time high, they have a tendency to push through that all-time high. That happened in QQQ with ease, that happened with SPY, and I think it is going to happen with DIA also. What I think doesn't matter, but it seems to me that it will touch the all-time high as well. And it also has trendline support. IWM is far from the last all-time high. Not very far actually. Let's check it out. This was the all-time high, and now I'm using monthly chart. It's about 10% below all-time high, not that far. So DIA is about 4 to 5% and IWM Russell 2000 is about 10% from last all-time high. Looking very bullish indeed, and IWM has also displayed red dots in the weekly chart for the thrust indicator. Very overbought indeed. What about the FANG stocks? Let's look at them. Apple, very strong. $2 trillion company moving up like it is a small cap stock. Very bullish indeed. There's no question of even thinking of shorting it. Facebook, by the way, that thinking of thing that I heard from the Fed chair when people asked him about probability or possibility of raising interest rates, and he said they are not even thinking of raising interest rates. So I'm not thinking of shorting Apple. None of the FANG stocks, in fact. Facebook also very strong, made another new all-time high. Very strong indeed, overbought. Amazon, very strong again, has memory support. Netflix, this is weaker than the others, however, it has memory support. In the weekly, it is holding to this price level. There is no direction in Netflix for a while. It's better to avoid taking directional trades in Netflix. It is weaker relative to the other stocks we saw, Apple, Facebook, Amazon. Microsoft, very strong again, about to make another all-time high, probably today. In the pre-market session, it is up by 0.39%. It has gone to 217.32. Let's see the previous high, 217.64. So another about 30-40 cents away from making a new all-time high. Google made a new all-time high this week. On a closing basis, that was yesterday. Very strong indeed. And Tesla, very strong. Very strong indeed. They are helping to keep the Nasdaq up, and probably that sentiment is helping the whole market to remain up and going up. If we looked at the market breadth for several weeks now, that was weak. Before I look at the market breadth using QH, there is a question: when is the headwind in Facebook negated on weekly? I will try to answer it like this. In Q systems, we have very clear trade setups. We don't have to think about when this headwind, I think Sri is asking about this headwind. We don't have to think about when this is negated. We just have to see when the checklists are allowing us to take a trade using any of the trade setups. And the checklists are on my traders forum. On the menu bar, I have organized everything. This checkbox, if you click that, you will go to the trade setups, the standard trade setups box, bounce, headwind, then go with flow. And if you click on any of them, it will show you the checklist. When the checklist conditions are met, you take the trade. And they were designed after a lot of analysis, lot of simulation, lot of actual trading. They work pretty well. And I think this equity curve, I'm pretty happy, I must say, with anybody's account who has an equity curve like this, trading stocks and stock equivalents. Of course, there is no portfolio margin. $33,000 account cannot have portfolio margin. So I cannot add leverage to this account. So again, we don't think in terms of when certain things are negated. We just think in terms of when we have a trade setup, and we use the diary to see if the risk reward is acceptable and things like that. I hope to join a session with you all soon on the diary. If you are not following any diary, I strongly advise you follow this diary. And if you are not getting at least 20% annualized return on total capital of your account annually trading stocks, then I think the diary may fix the situation. I think so. But you have to be the judge of your own account. Coming back to the markets are very strong. The mega cap stocks are very strong. By the way, if you are following news, ExxonMobil, let's look at that. ExxonMobil. When I did my MBA, one of the very top executives in Asia Pacific of ExxonMobil was in our class. We are always proud of all these big companies. ExxonMobil, it was part of Dow for many, many years. I think 80 or 100 years. Not 100 exactly, maybe 80 years or so. But soon it is going to be removed from Dow. And let's look at the monthly chart. See how it peaked at. Let's see the price. Peaked at high 104.76. Now it is 40. So even a strong stock, and they used to be the biggest listed energy company in the whole world for many decades. Many years. I don't know exactly how many decades, but many years they used to be the largest energy company in the world prior to the Saudi Aramco listing. After Saudi Aramco's listing, they became the world's largest energy stock. But ExxonMobil was part of Dow average, DIA, for a long time, but now they are out. That reflects that even the strongest stocks may not be strong forever. Just like BlackBerry, it was not strong forever. Lucent Technologies, I used to work in that company. Great company, but didn't last forever. That is why it is important, even for long-term investors, to keep an eye on how the stocks industry or the sentiment about the industry, the sector is changing. Also, the energy demand is changing, and that is reflected in the price of ExxonMobil and also it being excluded from Dow soon. Energy is now not the dominant sector anymore throughout the world. And if you notice, Apple, Amazon, Microsoft, and Alphabet, these four companies, each of these four companies' market cap now exceeds the total market cap of energy stocks in the USA market. Again, each of these four tech companies' market cap now exceeds the total market cap of energy stocks in the USA market. That is how the technology stocks are influencing the USA market. Extremely robust, extremely robust. This is not a time to buy energy stocks. Let's have a look at US oil then, oil ETF. I mentioned it in many webinars now that it is moving in such a narrow range, USO, in the daily chart, that there is, for me, no point in trying to trade the oil. Don't need to, but I will wait for it to break out of the range to see the direction before trading it. Some days it is going up, some days it is going down. However, it is still inside an extremely narrow range. And now I can see it has both memory resistance and support again. Extremely narrow triangle. No trend. It is unusual that oil is moving in such extremely narrow range for so long time. What about gold? Gold, I suggested shorting based on this headwind, and I mentioned the short had to be taken next day using fine-tuned chart because there was a lower tail in the headwind candle. After that, price dropped, tried to recover, dropped again. Now it is inside the triangle pattern. Again, Q traders may avoid taking a directional trade in it. The weekly has robust support. Looking at that, it seems more likely that price will go up from here. However, there is a memory resistance. Even if it goes up in the daily chart, we have to see if the memory resistance holds. A safer point to buy it will be if price comes to the daily memory support, at which point it will also hit the weekly memory support and reverses from there. That is a very precise technique of taking a position, very precise. Look at the weekly, daily memory supports, but use fine-tuned chart to enter the trade using real-time data. Your stop loss is on 5 or 10 minutes interval, your profit is in the daily interval, the reward risk ratio is extremely high. And the memory supports provide very robust support. You may keep an eye on that possibility if you are having time to look at the market during market hours. Q systems allows us to short sometimes at the very top using the headwind signal or bounce setup or even box setup. And I was tracking XHP, the home building. The home building was on fire. It was going up very strongly. Whatever be the reason, there are many hypotheses. It is not important for me. I'm aware of them, aware of the hypothesis, but I don't talk about that because they don't decide my trading direction. I noted that XHP, the home building ETF, displayed a bearish headwind. And it was the day when new home sales blew past expectations, blew past the biggest of the expectations. How did I know that? I knew that from Zenith because I keep an eye on the major economic events. Let's look at, I think, yesterday. Yes. New home sales. The result came out yesterday, 10 a.m. Eastern Standard Time. The actual was 0.901 M, I think, million. And the maximum of the poll numbers was only 0.851. And I have set up Zenith in a way that when the actual is higher than the maximum, then it shows me this alert that it is extremely strong. When something is very strong at the very top, I keep an eye on that instrument. So I looked at XHB and I noticed the bearish headwind because there is a memory support. I'm not going to short it now, but if it breaks below the memory support, it may give a headwind short trade setup. If it does that today, but in may be unlikely because in the overnight market, pre-market session, it is actually up. If yesterday it broke below the memory support, that would confirm a headwind short trade setup almost. Why almost? Because yesterday was only Tuesday. So the weekly requirements we had to be cautious about. When I looked at XHP, I wanted to look at QH, the home building industry, and that is part of consumer discretionary. So let me drill down from the sector. Here is home building. Let's use the Caesar icon to look at only that, and you can see home building industry in QH also started to weaken for 2 days now, and it is showing deceleration also. Therefore, there are reasons to short XHP. It is not a stock, therefore I'm not able to look at its fundamentals, but the industry related to XHP is weak now relative to others. It is decelerating. The XHP chart displayed bearish headwind. If I look at the percentage, where is home building? Here. Though the market went up, you can see both over last 2 days as well as yesterday. The home building industry is actually down. Sometimes you may keep an eye on these economic indicators, and at some point everything will roll back. It may not start a bearish trend immediately, but at some point every tradable instrument will pull back, roll over. And you may keep an eye on Q edge, and if that industry has an ETF, you may keep an eye on ETF like home building has XHP to first of all decide. Let's look at XHP. First of all, decide when to exit your existing long position. If you are a longer term holder, you may be happily holding XHP. At some point, you may exit the position. That will be probably when it starts to roll over. And keeping an eye on the major related economic events with the Q signals and the Q edge industry rotation will help you precisely decide when to exit long and if to take a short at the same time. So I kept an eye on XHP here. I looked up XHP from the economic events. I didn't run any scan to find XHP. The other stock that I shared in the forum, one stock was CUBI. I think I timed it well. And if you remember in the live webinar on this day, I looked at several banking stocks. I looked at the banking regional banks ETF also, KRE. At that time, the regional banks industry was weak, but so many regional banks had this weekly and daily memory support. I was anticipating that price will go up from the support, at least somewhat. And I talked about it on this red candle. The industry was weak, the stocks were down, and very next day, almost all, I don't know all or not, many of the regional banks went up, and I was ready with CUBI because this was the only one of the ones that I analyzed. This was the only one that didn't have any memory resistance nearby. And fundamentally, it was very strong. You may remember it was undervalued and with earnings growth at the same time. So if you kept that in mind, you would be ready to take the long trade on this day. And you might not have to wait for the end of the day. You could take the trade if you were watching it. And let me change the template for intraday time frame. In the morning session, you would use 5 minutes. That's the Q guideline. On this day, right when price broke above early range high, you take a long position. You wouldn't wait for the close of the market. So your risk was only this much. By the time it hit this pause level, you had covered much more than the risk distance. Sometimes what I may do when I'm using fine-tune chart to precisely enter the trade, when I take the trade, I may take double my swing trade position size. Swing trade position size is decided by diary. I may take double my swing trade position size and exit half when the risk distance is covered or at one of these pivot levels as a day trade and continue to hold the remaining position. You could do that with extreme precision because you could be ready just like I was ready and I analyzed it one day earlier itself. You can anticipate things to happen because these memory supports, watermark supports, and reversal like bear release or headwind at support, they in this case bull release, bear release, both at support resistance, headwind, they work very well. So you could anticipate and take the trade precisely. one more stock that I shared yesterday is not a typical Q stock, it is a penny stock, and I am not a proponent of buying selling penny stocks, but I came to notice this stock yesterday because I have a list of very low price stocks but liquid, not very illiquid. They're still penny stocks, not all of them, but low price stocks, and this was one of them. I looked at the stocks, low price stocks that were star fundamental stocks, and let me demonstrate that what I did. This is Q Vital. In the universe, I have the usual mid-price stocks, and this mid-price stock, this is my usual trading universe. And then I have another low price stock. Sometimes I look at them. So yesterday I wanted to look at the low price stocks. Market is so overbought, I was not going to open many new long trades, as I mentioned earlier also. So I had time in hand and I wanted to just look at the low price stock. So I transferred them to home, calculated their Q fundamental scorecard, looked at them and clicked the 3-star green button, and see SYN came to the top. That is how I found SYN, SYN. It's a biotech, you can see from here. I didn't know about this stock before. It is not in my usual stock trading universe, but this is how I found SYN. And then I looked at its stock. I changed to monthly chart and I noticed that at one point it hit 150. That was in 2015. After that, it has dropped. It's hugging the lowest price ever, around 50 cents. And yesterday it went up by more than 20%. If you carried out this analysis in time, again, I'm not a proponent of penny stocks, but this analysis you could apply on the mid-price stocks also, the same technique that I explained. What is the technique? Maintain a list of your favorite stock universe, analyze them with Q Vital, look for the strongest fundamental stocks, 2 or 3 mouse clicks, and you will come to see the stocks that are probably giving the best buying opportunity. So this is an easy and a very effective way to find the best fundamental stocks and get into them before others. Again, SYN is a penny stock. I'm explaining the technique, how I found it. I'm not suggesting trading penny stocks. It gave a pullback to support trade setup yesterday, and also the weekly, daily, both are cyan color. Keeping in mind the weekly candle is not complete yet, so it's not certain, but it seems to give a go through and following long trade setup also, provided price can stay at least at this level. In the overnight market, it is slightly up, but penny stocks can suddenly go up 20%, suddenly go down by 50% also. The technique is more important. This technique of all the trades that I'm sharing, whether it is XHB or SYN or CUBI, combined with the diary, is what leads me to tell repeatedly that there is no reason one should not make profit in the market. But you have to see it for yourself because it is in your own account and you are going to trade yourself. I'm not going to trade in your account. We saw market is strong, but it is overbought, very overbought, extremely high, unusually so, keeping in mind that the global markets, other than India, which tends to move in unison with USA anyway, for better part relative to other global markets, all other global markets are sideways. That's even more reason to be cautious, but it is bullish. So I am not taking many long trades except risking small amount in stocks like CUBI. Fundamentally strong, that it is at a low price level. And if we look at regional banks, why don't we look at, let's start with Vital. cubi.n, just to reinforce that how easily I could find and know that it is fundamentally very strong, both in terms of valuation and earnings growth. Undervalued stock with positive and accelerating earnings growth. Even yesterday, 74% of the stocks went up, and you could take the long position day before yesterday using fine-tuned chart. And if you look at the industry using QH, remember when I first discussed it just 2-3 days ago, this was the color of the industry, magenta, and see now it has changed, continuing to accelerate as well. That is how precisely you can time your entry. And because it had excellent memory support also in weekly, daily both, that made it even higher probability trade. And last thing was to use the diary to make sure the risk is also managed, which I did. Though market is strong, I am only buying into industries that were weak and starting to turn around. If we look at the market breadth though, even yesterday, it doesn't show the strength that is seen from the market ETF, especially SPY and QQQ. And this happened not only yesterday, it happened several recent days also. That's another reason to be cautious. If we look at the finder, which shows the Q signals, bullish and bearish across different categories. This is weekly period, keeping in mind the week is not over yet. I ran the Q finder on the current week, and all signals are overall bullish. Every category is overall bullish now in the weekly period. Weekly is not complete yet. This is as of Tuesday's close. And if I look at the daily here. Yesterday we saw from QH market breadth was not that great, and we can see Q finder daily also, that is yesterday's result. In terms of Q signals also, it is not that great. In fact, there are more reversal signals on the bearish side. And keeping an eye on this, keeping an eye on the headwind signals may help you take the shots at the very top. Let me spend 2 more minutes to see some of the reversal signals. They always give extremely lucrative trading opportunities. So I'm going to go to the bearish tab. Let me look, okay, let me go back to home. Reversals are more on the bearish side. These are the reversal signals. I can see there are many memory resistance touch, many reversal candle, many headwinds, some bounce. So let me try to combine them. Let me try bounce with reversal. Bouncing down from memory resistance with reversal candle. So go to reversal. That's how the home graphs, again coming back to, that's how the home graphs on QFinder helps us decide what to focus on. Of course, we could look for some bullish trades also, but let's look for some reversal trades. I'm going to look for reversal setup, flag them, and see if any, only one I can see bounce is there, flag them. One, Tiffany, let's look at it. And I use the chart icon to open it using Q Global. It had a sharp drop yesterday, but there is another memory support, so it's not giving any short trade setup right now. Go back to Finder. I'm going to delete it, refresh the data. So there was no combination of reversal with bounce. Let me try reversal with box. Let's see reversal with box. Box with reversal, only one. Let's open that. Shoe. SHOO. Okay, I think the data is not updated. Reversal with box. I think the data is not updated. Sorry about that. This data on Finder doesn't seem to be updated. There is no reversal candle on shoe, isn't it? Yes, there is no. So the data is not. Sorry about that. So I will not continue with the exercise. In any case, the Q edge is showing that the breadth is not as strong as the ETFs are showing. That is a reason to be cautious. At the same time, there are industries like regional banks that were weak for a long time and now seems to be turning around. So there may always be low risk buying opportunities in stocks that are fundamentally strong, industries that are getting into favor now. We are at the 1 hour point. Please drop me an email if you are ready to discuss some of the stocks, actual trades. No quantity required, just the stock symbol and entry date. We can type it in diary and see how to use it. Drop me an email and I'll set up a separate tutorial session for that. That is all that I plan to share in today's session. Thank you for attending. I look forward to seeing you in my next session. Have a great day. Have a great week. Keep safe and trade profitably. As I mentioned, there is no reason not to do so. Thank you. Bye bye.